Hey, good morning. Tony LaPorta here with NakedTrader.com. I'm in quite a bit of pain here this morning. These 55-year-old bones are aching a bit. I don't know what the hell I've done, but I have issues and I'm icing it and who knows. So lots of ice, lots of ibuprofen, not too much sleep. And I'll tell you one thing: if I think I have issues, this market surely has issues. I I wrote in my commentary last night. I have been talking this head and shoulders top formation with my people for quite a few weeks, and I love yesterday when we finally break the neckline properly. Even though we did break the neckline the day before, but when we finally break the neckline properly, all the schmucks, all the novices, even though Art Cashin is not a novice, they come out and they're talking, head and shoulders top. So, what I know about head and shoulders tops, the market should have closed on its ass yesterday, and it did not. And I called for we and all the indice markets in the treasuries. What we were left with were minor trend change indicators, which meant buy the indices, sell the treasuries. The objectives from these formations were a trade in the indices above the previous day's high, or that day's high, and a trade below the lows in the treasuries. Well, all those, with the exception of the bonds, needed to get below 130.15. I think they traded to 130.18 last night. But all the other objectives were met overnight. I do write in my commentaries: if you're long these markets or short these markets, get your bids in, get your offers in for the overnight session. And remember that these are minor trend change indicators only, even though they may signal the end of this bearish move or bullish move. That assumption should not be given much weight. That is technical analysis 101, straight out of my Bible. And these objectives were met last night, like I said, with the exception of the 30-year, and the markets have reversed. So I look at the whole of the market, talking with a very dear friend of mine, a 37-year veteran, and I look at how the Dow was winging it around yesterday, and in my weekend commentaries, I put out a few volume statistics for the euro dollar, the interest rate euro dollar, and the 10-year note, and I noticed a dramatic decline in volume over the last couple of weeks. And what that told me was that the players quit playing. They didn't want to play the Washington game, and obviously the players in Europe don't want to play the European game. So, with knowing that August was right around the corner, they quit playing, and which is why you see the Dow fall 166 points in under 30 minutes, and then rally 100 points in 10 minutes, and drop again and rally again, and all over the shop. There's no one playing. I am, after almost 33 years in the business, I haven't been playing for 2 weeks, and I'm looking at these market moves thinking this is Chop City, no pity. And being in a little bit of pain here this morning, it would be a lot more painful, especially wanting to be bullish and knowing that the Dow is going to open up 100 lower. So I am keeping my trading boots hung up until the end of August, and I'm going to enjoy August. I'm going to hit the road soon again, and that's about it. So what you do with this market is your issues. The best thing I could tell you is, if you lose your ass in August, those are your issues. I've myself, even Mike Viacchi has been stating, this is no time to be shooting from the hip. It's August. This is the month when all the big money goes on holiday. All the big traders go on holiday. So if if you're playing with the little boys and some of the big boys, and the big boys are pushing these markets around, and they're not doing well at it either. So mind your eye today. As I've stated for years and years and years, the Thursday before, if you're trading the credit markets, the Thursday before payrolls is usually corrective style trade. As the longs sell into strength to liquidate some of their positions going into payrolls tomorrow, and the shorts buy weakness. So historically, the Thursday before payrolls, you will see the treasuries and these 2012 euro dollars, whatever euro dollar contract are trading. Historically, you will see them close mid-range on Thursday. So with that, we could still see big ranges today in these markets due to the fact no one's playing. But buy them when they look their worst, sell them when they look their best. This is Tony LaPorta with NakedTrader.com signing off. If I was a gambling man, I would buy the indices 100 lower today. Cheers.